In recent days, the financial market has been shaken by an unexpected piece of news. Warren Buffett, the world's greatest investor, made a surprising move by selling nearly half of his Apple shares. This action, taken by Berkshire Hathaway, the company led by the Oracle of Omaha, has sparked speculation and raised questions about what this could mean for both Apple and the global economic landscape. At 93 years old, Buffett still demonstrates his ability to stir the market. With a personal fortune estimated at over $135 billion and Berkshire Hathaway managing nearly $1 trillion in assets, every move he makes is closely scrutinized. The decision to sell such a significant portion of his Apple shares is seen by many as a signal of something bigger. Since Buffett began investing in Apple in 2016, he has consistently praised the company, recognizing its revenue-generating potential. His initial investment of $34 billion grew to be worth over $169 billion, an impressive appreciation. However, what could motivate an investor known for his patience and long-term vision to change his mind so drastically? Speculations vary. For some, the decision may be linked to the perception that Apple faces significant challenges ahead. The company is not just an electronics manufacturer. It also ventures into areas like services and technology products, sectors that, while promising, are also vulnerable to regulatory and political changes. Volatility in emerging markets, such as artificial intelligence, for instance, can bring both opportunities and risks, and Buffett, known for preferring stable and predictable markets, might be anticipating difficulties. Furthermore, the recent history of strict regulations against tech giants, such as the case of Google being deemed a monopoly in the search engine market, may have raised a red flag. Apple has already faced heavy fines in Europe and is dealing with challenges in China, a crucial market both in terms of sales and production. Apple's interdependence with China poses a dual risk. Any decision by the Chinese government could directly impact the company's operations, and the growing tension between China and the United States only adds to this uncertainty. Buffett has also begun reducing his stakes in other companies, such as the Chinese automaker BYD, even after its success in surpassing Tesla as the largest electric car manufacturer in the world. This sale is seen as a reflection of his cautious view on the Chinese market. Another noteworthy point is Buffett's actions concerning Bank of America, one of his most traditional investments. Even though he remains the largest shareholder of the bank, he sold a significant portion of his shares, indicating that his confidence in the financial sector might also be wavering. What is most intriguing is the reallocation of capital resulting from these sales. Buffett directed a significant portion of this money towards purchasing U.S. Treasury bonds, accumulating an amount that even surpasses that of the Federal Reserve, the central bank of the United States. This move is interpreted as a search for safety, distancing himself from the volatility of the stock market, especially at a time when central banks around the world are raising interest rates. Finally, Berkshire Hathaway's record cash accumulation of $277 billion suggests that Buffett may be preparing for a future opportunity in a downturn market, similar to his actions before the 2008 crisis. This cash hoard is seen by some analysts as a worrying sign that Buffett expects tough times ahead. However, there are those who believe that these moves are more related to internal issues at Berkshire Hathaway than to an imminent crisis. With the recent loss of Charlie Munger, his longtime partner, and Buffett's own advanced age, the company's succession plan is being prepared, and the next leader, Greg Abel, might be handed a company ready for new investments and challenges. The question that remains is, are we facing a signal of a global crisis, or is it merely a strategic restructuring by one of the world's greatest investors? The answers are yet to come, but what is certain is that the financial market will continue to closely watch the next steps of the Oracle of Omaha.